All right, your portfolio matters. We understand that right now. So we're bringing in Kevin Miller, E-Valuator's Chief Investment Officer. And he wouldn't get out of the chair, so we said, let's bring Peter Schiff back. He is here once again for this massive, massive. It's a 2.25% market sell-off. But in the aggregate, we are looking at this very moment at multiple days, Kevin, of significant losses. What, as an investor, should people be doing right now?
Well, obviously, the first thing you have to acknowledge is how long is your time horizon until you're going to need your money. And if you are going to be spending money within the next 2 to 3 months, obviously you shouldn't have been in the stock market with that money in the first place. I think now you just have to ride this out. We have things coming up that have a definitive timeline that could abruptly change the direction of this market and change it significantly, which would be the Fed, what they're going to do this week, and then in the upcoming first half of next year, then obviously the China trade agreement. Peter,
does the Fed blink in light of everything that's happening today? And we are off the lows of the session, but...
Yeah, look, Liz, I think regardless of what the Fed does on Wednesday, I think the next move after that is go. Yeah, I am. Regardless of what they do, the next thing they're going to do is cut rates. They're going back down to zero, but it's not going to stop the bear market, and it's not going to stop the recession. It will probably kickstart inflation into a higher gear. But, you know, Charlie, before I came on, Charlie was saying there's a lot of fear out there. There's not. There's an absence of fear. There's a lot of complacency out there. People should be afraid, more so about what's going to happen to the economy. There is going to be another financial crisis. The next recession is going to be much worse than the last one. That is the problem. You know, whether or not the Fed is going to let the cat out of the bag tomorrow, whether they're going to take a punt and not raise interest rates, but regardless of what they do, this is the last rate hike. And the mistake that the Fed made, though, was not raising rates. The mistake was cutting them in the first place. They never should have went to zero. They never should have left them there that long. The minute they did that, they doomed the economy.
Kevin,
and now we're going to have to reap the whirlwind of what they sowed.
Kevin, we've got 30 seconds left. Can you tell me what you advise your clients to buy in this atmosphere where there are some definitive moments, as you put it, coming up on the calendar?
Well, I'd tell them to definitely stay out of indexing and go with something on a more active basis. I do believe that I disagree with Peter. I don't believe we're going to go into a recession in the near term. I believe that we're going to be fine with regard to where this market can recover. It is painful, but I do think that the long term is positive for us.